Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, June 21st, 2021. My name is Alexander Turro, Senior Market Strategist here at RGO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well, within the context of the prior week. So with that said, we'll start with the global currency market. You had a counter trend bounce in the US dollar last week as it ramped up 1.8% on the week, but was signaling immediate term overbought as it continues to signal bearish on a 90-day trend duration. On the other side of the US dollar, you have the euro correcting in kind, minus 2.0% on the week as it continues to signal and hold its bullish trend formation. Taking a look at the Canadian dollar, that corrected minus 2.5% on the week last week versus the US dollar as it continues to signal bullish on a 90-day trend duration. And then you take a look at the British pound versus the US dollar, that corrected as well, minus 2.1% on the week as it continues to signal bullish on a 90-day trend duration. And so the inverse of the dollar, you did have commodities, which corrected minus 3.0% last week, but still are up 10.0% in the last 3 months alone as they continue to signal bullish on a 90-day trend duration. Breaking that down further in WTI oil, which was seemingly not afflicted by the Chinese selling, if you will, that continued its inflation higher, another 1.0% last week, and now plus 20.1% in the last 3 months alone. Copper was a product of the Chinese selling, if you will, correcting a big 8.4% last week, but it's still up 1.4% in the last 3 months as it continues to signal bullish on a 90-day trend duration. Taking a look at the agricultural sector in corn, that corrected as well, 7.1% last week to now plus 21.0% in the last 3 months. And they take a look at lumber, that corrected as well, minus 15.2% last week, but regardless is still up 15.5% in the last 3 months as well. And so on the other side of commodities here, you did have gold, which again trades more like a currency as opposed to commodity. That was down minus 5.9% last week and now minus 7% year to date. As you take a look at some of these European equities, they continue their appreciation higher. Take a look at Swiss stocks. Those were up another 0.8% last week, 8.8% in the last 3 months. German stocks corrected minus 1.6% last week, most of that coming in on Friday, but it's still up 4.6% in the last 3 months. And so just touching on European bond yields, which had quite a big divergence in the long end of the European curve. Take a look at German 10-year Bund yield. That was up 7 basis points last week. Italy's 10-year yield ramped up 13 basis points as well. And again, that's it's different to what you were experiencing in the U.S. Treasury space with the 2-year breaking out to the upside, 11 basis points to 0.26 as a product of the Fed. You know, on the back of that, you did have Treasury volatility. The MOVE index start the week at around 50 basis points and now ended up at around 60, which again was primarily a product of the short end of the curve where the Fed shocked the curve. Clearly did not see that in the European bond market. And just touching on lastly on U.S. equity volatility, you did have the VIX up 32% of the week, but appears to be nearly nothing more than yet a episodic and non-trending spike in equity volatility. As if you take a look at the VIX, it's still down 4% nearly for the last month. That's coming into a slew of economic data this week. You take a look at, you do have a number of Fed speak, some PMI data, durable goods, GDP, as well as the BOE later in the week. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.